at the bottom of
Nike is out. Nike reporting 53 cents. The estimate was 38 cents. That's a beat for Nike. Revenue 12.43 billion. The estimate was 12.21 billion. So that's a beat for November Kilo Echo. Asia Pacific and Latin America revenue down 4%. China revenue down 17%. Greater China, North America up 9%. For Nike, that's November Kilo Echo. Nike shares selling off here now.
Nike probably are going to want to hear the conference call, you would think. What's up, Mario? How are we looking over here? My streaming all right?
On week China revenue.
This. Oh shit! Tomorrow's Friday already. I got the heat guy coming tomorrow. What's up, Stavro? How's everybody doing? Okay.
UDR announcing $230
Let me lower this guy. Let me mute everybody here. Hold on. All right, famous last words, but I won't keep you guys too long. I didn't even get a chance to go get a coffee, which is a cardinal rule of mine, but that's all right. We'll go over a few things. Again, big OPEX week this week, so not really a whole lot to talk about flow-wise, but there are a few things out there to keep track of. Interesting stuff. All right, is it 4? Oh, it's 4:15. All right, so let's get into it. Nike down a little off earnings. Michael Green off the conference call. They want to hear what's in store in the future there. Again, stock's been awful for a long time, so is part of this rotation that we've finally started to see in this market. Let me get some of this stuff out here. How do I get this off? Is this? There we go. So maybe starts to get its act together. Retail names have shown some life recent. FedEx had decent numbers. I think they raised guidance. Stock was up initially, up about $4. FedEx has been a nice mover. UPS trading higher with it as well. FedEx looks really good. One bad thing to say about FedEx is that it's come a long way in a short amount of time here, right? Maybe bumps up into the highs and catches its breath a bit. But other than that, going into next year, looks pretty good to me. This is, and that's what I was saying. A few of you like UPS as a laggard, and I'm a laggard guy at times, especially later in a rally. But I think, if the cyclicals, in the sense of just getting started, it might be smarter to start with a FedEx and then switch to UPS later on. But UPS has a whole different look, as you can see here. But possibly breaks out of this downtrend. Awful. I mean, compared to FedEx, like night and day. Look at this. But FedEx looks really good. And I think that's it on the earnings front. I don't think anything else of interest. Space stocks had a little bit more news. They've been in the news of late. All right, so let's get into things here. And if you're a STEAMROOM member, you came on the webinar Sunday night. We kind of the best in simple terms to frame it going into this week, this was a perfect week to just one of those weeks that we talk about, chill out and, day trade. And depending if that's your bag or not, if you trade intraday, you've had some movement on an intraday basis off technicals, right? A lot of you guys in the Steam Room been doing it, finding some success. So if that's part of your game, that's probably where, the direction to lean going into this week. And the reason being is that you got a big monthly OPEX this week, the largest according to Goldman. And, we lose the edge at a flow, right? So the only real edge for me coming from sweeper activity into these big OPEX weeks especially is kind of that speculative momentum type buying, right? And that shows up in weeklies. Because any size, usually we're looking for quality size buying, any size orders, especially in some of these repeat active names, there's been so much flow in these names this year that there's huge positions adjusting here. All right, so anybody who has December exposure, you name it, an Avgo, an NVIDIA, a Tesla, you're going to adjust those positions, right? And that's kind of what we've been seeing. Yeah, we don't know for sure if every order is a roll. There's no way of knowing that unless you know the player personally. So you just got to kind of just put them all under the same umbrella and bite the bullet, relax this week. You come to the conclusion you don't have the same edge coming off the flow that you have usually. And it's a good time to just clear your head and see how things shake out. I think and this is what's been good the last few times, at least it makes it easier for me. I love it when you run into a week like that or a period in time like that, like if you're coming into earnings season and stuff like that. And, some of the signals you pay attention to are pointing in that same direction. And it all lined up going into this week. One thing I will say that we've been talking about, and I'm not a huge indicator guy when it comes to market indicators like RSI, MACD, all that stuff. But you guys know I follow the DeMark exhaustion stuff, right? And we've had upside Niners because we have, quite the rally over the last couple of weeks, especially in cyclical small caps, banks, stuff like that. But you've had literally upside Niners all over the place, Let me put them on here so you can see. Hold on. And I think, if I'm not mistaken, I think we talked about it the last Thursday webinar. I think we discussed it. Okay. Here. Right. So again, it doesn't mean the end of the world, doesn't mean the bull market comes to an end, right? But a lot of times, especially rallies longer in the tooth, you usually get some sort of pause, digestion, or a short-term rinse, right? And that's, we did talk about this. We went over some of the examples. Here you had an upside Niner, led to this little cooling off. This upside Niner just pretty much sideways chop, right? You had a Niner here, a little sideways. Are these Niners here? I think they are. Hold on a second. Why is this indicator? Yeah, these are Niners. All right. So again, as the rally gets longer in the tooth without a correction, you're subject to these breathers, right? Sometimes it can lead to a deeper correction, longer correction, but not always, right? Depends on a lot of other things. So again, what I'm getting at is you had these exhaustion signals, not only on the indexes, but on every index, basically. Okay, ES, Qs, individual names. Every name that I pulled up at the end of last week was running into an upside Niner. Every name that had some interesting flow, every single one. So again, it just lined up perfectly with OPEX week and to allow things to digest. Because the truth of the matter is, if these stocks in the market ignore that stop sign and just rip through, especially at this point in the rally, that's not a good thing. All right, we usually got to pay the price once that momentum dies down. So it was a perfect week to allow things to settle in, shake out, and see where they stand, right, with the last week or two of the year and going into 2026. And a lot of us already have been kind of mostly focused on, what the first quarter or two going into next year, if there are any signs here, right, of what things may look like. So that being said, any of the flow this week that you may have questions on, or anybody in the Steam Room seeing flow, I hope, again, you at least watch the beginning of the webinars we do, at least the first 5-10 minutes, because I have no opinion on any of the order flow this week, okay? You like any of the action, make a note of it, see what lines catching flow, and if they come after it post-OPEX, right, and they continue to hit that line, stock still in the same spot or even better, comes in a little bit, then you have something, okay? So that would be what I would recommend in regards to any questions on the flow you guys might have, all right? What's interesting, I think, is in the overall market of what we've been seeing, right? We've been talking a lot about this cyclical-driven rally, right? And we finally have started to see it manifest, okay? Started to see it in the price action. But, just like anything else, and, I kind of touched on this last Thursday, just because we're bullish, again, if you're on the same page, just because you're bullish cyclicals or whatever you're bullish in, right? And you see constructive signs for the future, doesn't mean you want to get sloppy and just buy and chase at any point, right? This is something, again, I think should play a major role into 2026. Okay. That being said, you're going to have shakeouts along the way. You're going to have rallies where players chase and they're going to get stung. All right. And I think even a couple of you guys, who's a Steam Room member, brought up on Sunday, all of a sudden, it was like we were the only ones talking about small caps and cyclicals. And then all of a sudden you start to hear, right? You turn on CNBC, Bloomberg, or you go on social media, more and more people starting to talk about this rotation, and possibly these names are where to be in 2026. All right. And, when you see that, again, doesn't mean that whole trade falls apart and doesn't exist anymore. It's just, in all likelihood, it's going to stall and there are going to be shakeouts along the way. Right. And that's kind of where we were at. Any name, especially the leaders that have seen flow in regards to cyclicals, a lot of these names have come a long way in a short amount of time. And at the least, upside niners in many of these names. Okay, so we don't want to chase these things. All right. If that rotation, if the cyclical bull has legs, okay, you're going to see constructive consolidation. And more importantly, you're going to see the buying spill over into other parts of that market. It's not going to be the same names that see all the buying throughout, right? If it's a real bull and not just a short-term rotation that we've been seeing, it's not just like the Mag 7 names that keep catching flow and there's nothing else to buy. Okay, it's a big part of the market, right? We talked about it. You got retail names. You got economically sensitive names in general, consumer discretionary, financials, right? You got so many different parts, so many different transportation. All right. So again, while I am still bullish on all that part of the market, right? And that all has participated, right? We talked about like the home builders. They're probably, that's where the most pain is at in that cyclical trade, because they got a lot of fundamentals going against them right now. But again, looking ahead with a Fed now more cooperative and cutting rates, right? That will likely get investors to look through the pain in a sense. Okay. It really hasn't taken fold yet in the home builders, like it has in some of the other parts of that cyclical market. Okay. So they may not move all together and all at the same time. And I think that's where the opportunity may lie and where the flow can play a big part. Right. And me personally, a lot evolves around what sweepers are doing. So I don't want to get carried away with buying stuff that sweepers haven't shown up in yet. Okay, I want to be patient, and I want sweepers to confirm, okay, these things are close to ready. All right. So again, I don't want to spend too much time on that again, because we've been talking about it a lot now, and now you got everybody else who's been chiming in on it. That has caught along. Why? Because a lot of the stuff that they've been focused on and have been trying to buy dips hasn't been working. Right? So they've had no choice. If they're looking for alpha in the market, you're not going to find it in the speculative high growth zero revenue stocks. Right? They took it on the chin. You're not going to find it in a lot of these Mag 7 names or larger cap names. Many of them have corrected and lost momentum. So they've been forced to look to these other parts of the market. All right. I think that's a blessing in a sense, especially if you like to play the growth area of the market, which I do. I like growth stocks. I'm not a cyclical guy. Growth stocks, that's where you get your biggest bang for your buck. That's where you find some really interesting new names. It's just been an extremely crowded trade. Right? All the names you probably wanted to own, you've already owned and bought and sold numerous times, and now everybody is in them. Everybody's looking to buy every dip. That was the problem there. Okay. So now think about what's gone on here. And I think, again, when you take a step back and think about what has happened in this market, and the S&P 500 still just looks like this, right off eyes, it's amazing. You literally had this stealth correction go from pocket to pocket and do its business. All in all, while the major indexes have held up extremely well, right? You had a blow off top and bubbly type price action, as we talked about in the speculative part of the market, the underbelly names, right? The niche plays, the theme stocks, whatever you want to call them. That was the first to go, right? They all 50, 60% correction, the majority of them, okay? And they still can't find much momentum, right? Some of them are continuing to trade lower. But you've really had a nice cleansing there, okay? Like, again, the pain, if you look at it from a pain perspective, there's enough pain already there. I think it's just a matter of time. What we want to see now is we want to see the players in the market lose interest in these names. We want to see them go dormant. We want to see them, the healthiest way would be they just consolidate. They trade in a tight range or choppy, lighter volume. The flow really starts to dry up because, again, that's a lack of interest when we're not seeing much flow in these names, right? These names were catching sweeps all day long, up, down, sideways, crooked. So you want to see the flow really dry up in the majority of these names. And then as we get into the first couple months of early 2026, these things are already set up for nice trades. Now, again, I want to make sure I'm stressing the importance here. They're set up for nice trades off notable sweeper activity, in my eyes. Okay, that's a big difference, right? Meaning, I know a lot of you are probably looking at these names and find them appealing already because they're well off the highs, right? And you probably, let's be honest, like these names higher, okay? For me, and again, sweepers are a big part of what I do, they're not there yet, all right? Because it wouldn't surprise me if they stay dead for a while. It wouldn't surprise me if some of them continue lower as they lose momentum. So the only way that I would have any idea whether that's going to happen or not is from the sweeper activity, right? So if any of these names going into the new year start to see aggressive sweeper activity, at the least they're set up for a real nice trade there. All right, I'll give you guys an example. Because it's like a popular name, right? Irene. Many people like this name. Love this name. Okay. Again, you had this big blow off move. I got trolled and crazy feedback here on these webinars. As you guys know, when I'm trying to warn people up here, if you own it, you want to hold it, that's fine. Make sure you don't buy it. It's going to 150. It's this, that. Do you know the electricity bill? Blah, 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 blah. I get it. Okay. Now, those people are buried, right? And again, I don't want people to lose money, but that's a good thing because that was the problem going in here, right? That's what did all this. Here now, if this thing starts into the new year and kind of finds a low, and the action and the volume starts to dry up, and you get that lack of interest, and then lo and behold, we come into the steam room on a Tuesday morning, and they start firing off sweeps like we saw all the way back here, right? You got a real nice setup. Okay, maybe it's not new highs, right? I mean, I don't want to jump to that conclusion, but at the least, you got a real nice setup for a trade, for a rally in here. And this applies to so many names, guys. So many names. A lot of names, and you guys know, right? Especially those in your steam room. A lot of the names that I couldn't even look at the flow anymore. I couldn't even talk about the flow in these names. That's how useless it was, right? It got to the point with so many of these names, the flow was completely useless. Now, a lot of these names, we're getting close to a period where the flow becomes actionable again. You have an edge off the flow again, right? And, I got that question from a lot of you. When I claim all this action here and the rolling, there's no edge off the flow, whether the stock's going higher or not is irrelevant. I'm talking about off the order flow, there's no edge, right? And a lot of you had the question, well, when does that edge come back out of the flow? And that's what I'm trying to describe to you guys now, right? We're closer to that point where it looks so far away in a lot of these things. We're closer to that point now than we've been in a long time. Okay? So, yeah, I'm not smart enough to know, does a name like an Irene trade lower? Does it stop bleeding here? Does it chop around here? I have no idea. What I'm getting at is, as we get into next year and the flow quiets down and Irene goes on everybody's do not trade list because it's been impossible, and then lo and behold, you start to see aggressive, notable buying show up, that's your entry and that's your actionable edge off the sweeper activity again. Okay? And from big to small, there's so many names as we go into a new year. There's so many names set up like that. Like, again, you take a Netflix, right? That's been awful. And, Netflix at times has been free money if you bought any dip in it. Okay? But like nobody's even talking about this name anymore, right? You see a little bit it's in the news now too, and nobody even cares, right? They're looking to make acquisitions. The flow has been more speculative back and forth in weeklies and front month. Okay. As it dies down, whether it goes a little bit lower here or stops bleeding, it's irrelevant. As it dies down and we get into early next year, and for those of you who've been following flow over the years, when they come into Netflix, they come in bigly, right? Those type of sweeps show up. You got a nice spot, right? And again, whether you're looking for just a trade or not, right, or something more, that doesn't necessarily even have to be, you don't even have to come to that conclusion initially, right? You can treat it as a trade. If you make money in it, you can roll and leave a piece if they continue to come after it, right? But again, they're set up for sweeper buying if they show up, So again, from large cap to small cap speculative stuff, is there. So that's what I think I'm feeling even better about right now is that I thought going into New Year, it was going to be strictly cyclicals. And then when cyclicals got too hot, we would have to wait for a pullback like we're seeing now, right? That's what we're seeing now. But we got a lot of stuff set up as we get into next year. Okay. What else did I want to talk about with you guys? So yeah, we talk about like this rest, right? You had the small caps had this nice move, right? Especially post Fed, run into a niner. You get a little digestion here. You get a little more weakness than just this little digestion. If you're bullish longer term, that's where you want to dip your beak and add to positions. Okay, so that's the way I would look at it. A couple things that aren't confirming a risk-on environment right now. And the price actually kind of indicates that, right? You've had this rotation primarily. A lot of the AI names, a lot of the more crowded names have got their ass kicked. You talk to, players who are in these names, especially on the retail side, you would think we were in 2008 all over again, right? The market's a calamity because, again, Bitcoin got hit. So many things got hit. But, sentiment as a whole, and this is what happens when the cyclicals join the fray, right? And you're not coming off corrective times. In other words, you haven't had a real washout in the overall market. When those cyclicals start to attract money, that's when you get some of the sentiment readings get a little hotter than you would like. And, again, we started to see that. If you look like a couple of these things we haven't whipped out in a while, right? So you got Citi Panic Euphoria Index has started to creep up. That's been coming in a little bit now as the market's been chopping around. The BOVA Bull Bear Indicator. Now, this is a new model that they've put out there. I'm sure you guys have seen. If I can find it. Here. All right. This got actually, I think, into the sell zone, if I'm not mistaken. But again, just a little heated than we would like. So what I'm getting at is this kind of choppiness that we're seeing here. Even better if this lingers into the end of the year, into next year, with some volatility in some of the more crowded names, that would be a blessing. I think and that's kind of what we framed it going into this week. This is the week you want to kind of sit back and root for downside. That's kind of how we framed it going into this week, right? And I think that's even for the remainder of the year here, right? If there's nothing glaring out there, right? If we're not seeing aggressive buying coming into anything too interesting, you want the market to digest, right? You want some of this stuff to cool off because there are other things out there that really aren't confirming kind of a risk on tape. Right here's a few. Let's show. So you got credit spreads. We like to look at some of these credit market signals, right? From swaps to spreads. And this is what you got going on again here, right? So the last thing we would want to see is an equity Santa rally, equity market rally at the index level into the end of the year. Why? Because credit is not confirming it, right? So if you get that, you're going to have some nasty divergence again here. And we know that this nasty divergence usually doesn't resolve in bullish price action, right? So you had this here led to a little bit of a correction here. This one was earlier in the year, led to a deeper correction here. Again, this one has been building here, but if you get equities to kind of catch down, right, it eventually washes out that divergence. It's not diverging anymore. Okay, equities are trading in sync with the credit market signal. So we don't want, market doesn't care what we want, but what we're rooting for here is not upside. We don't want upside in the indexes. If you're a true bull at heart, you don't want that here, right? Unless obviously credit changes and confirms that. Like a lot of people saw it coming out of the Fed, credit may confirm it. right? Because some people were thinking this is QE light and blah, blah, blah. This is what it would have looked like if it was QE light. You know what I mean? So here you got what this is kind of indicating in price action terms, more of a choppier range bound tape, right? Rotation, kind of what we've been seeing for the most part. So that I think would be ideal. That would be ideal because off those pullbacks, that's where you want to look for entries, right? Take advantage of some of the short-term sentiment, and stuff like that. And you can become more of a trader, but at the same time, you're looking for longer-term opportunities to possibly tuck away off good-looking flow, right? Because again, prior to the past week or two, a big part of the market, economically sensitive names, cyclicals, don't look like this. You understand? Like you could have a market go into a choppy range-bound environment, okay, but the home builders break out. Certainly possible, right? You could go into a choppy range-bound environment, but commodity-related names break out. All right, we've seen a 2022 bear market where that happened. You understand? So you're looking for opportunities off dips in some of these cyclical camps, especially off pullbacks. But overall in the market, chop is nothing wrong with it. We do not want the indexes to push higher and get everybody more bullish here. That's the last thing we want with credit looking this way. All right. That's the most important thing. All right. Like some of the sentiment signals are getting a little heated. Again, they aren't the best of topping signals, in my opinion, over my experience over the years. Like I've seen rallies continue through some of these big picture indicators. So that doesn't really make me too nervous. But as long as I think the market is not getting too carried away through that, right? Because again, I think there are opportunities within the market that have been neglected. All right. What else on here? A couple bullish things I'm seeing. You got a put the call. Now, again, you got a big OPEX week, so it could be skewing a lot of this. Okay. But you got the put the call has been pushing higher off this downturn. All right. Something to keep an eye on. At the least, if you get a down day and you get a spike in the put the call, that usually puts in a nice tradable low at the least. All right, something similar to what we saw here recently. And volatility was kind of wonky today. You had VIX, which was close strong throughout the day, but VVIX rolled over. Right, TDEX went higher. So this just could be December OPEC stuff here. I wouldn't pay too much attention to that. Let's see, anything else of importance? Hedge fund exposure, right? So here's another example with the cyclicals. All right. When you get that forced buying into the other parts of the market that they wanted nothing to do with, hedge fund exposure creeps up a little bit. Okay. But as you can see, the little bit of hug we had in the market here recently, and they're already starting to shed that off. Okay. Here's short-term sentiment comp coming into today. All right, so under 20, we look at names for opportunity flow in names. Under 10, that's where you want to play for a snapback squeeze with the indexes. Okay, so we're not quite there yet, but something to keep an eye on. We had a tactical sentiment bull signal coming into today, but that obviously is going to get washed out with the squeeze. Let me see. And this thing, I forgot. Sharpies. We're starting to get Sharpie data back, right? As you guys, many of you know, the COT data, CFTC data has been shut down because of the government shutdown. We've been getting lagging data back. I think we're caught up. We're a week off. But this is what it looks like all caught up to December. So it looks like they were putting on a little bit of hedging, and then kind of just took some of that off into the dip maybe, but flat. So Sharpies are flat overall in index futures, and in VIX futures they've trimmed some of that long exposure. Again, we're missing 1 week of that data. All right, so we're almost caught up here. A bull signal from this obviously will be if we do get some selling, even if it's within a range or choppy market, and Sharpies dip their beak. All right, they put on some long exposure into that. I doubt we'll see anything like this unless we had a legit pullback. But for now, that's what we're looking for here. All right, so no big takeaway from Sharpies that we missed, but that's good, right? We were concerned we may miss something. Okay, and I like to look at market internals, especially off sell-offs or rallies, to see how stretched or oversold they may be. We're kind of in la-la land right now because of the rotation. What I mean by la-la land, you had the financials are still somewhat overheated as far as internals are concerned. But, stuff like real estate is on the total opposite side, right? Even parts of energy are on the opposite side. So if we do get a drawdown, like for example, with the short-term sentiment comp that we look at, we get a bull signal there. I like to see a decent amount of green on here as well, because what that does is kind of confirm that when the snapback rally comes, it'll have some kick to it. When you're kind of scattered like this, the short-term snapback rallies can be short-lived, because it's more, again, of rotation in the tape than anything else. All right. I don't think there's anything else of, here's another look at Sharpies overall. Sharpies are the red, hedge funds are the green, and small specs, they've been little by little getting even longer. Okay. Anybody have any questions on? I think I touched on liquidity last week coming out of the Fed. Did I? No, maybe not. I think I did. But basically, the way I understand it, from again the people I follow in regards to liquidity, the Fed fixed the problem. Okay, and again, the easiest way to explain it is this: it may not have been the only reason, but it was one of the reasons. What was a big part of the selling here, in my opinion, okay, where we saw a lot of the speculative names, right? A lot of the crowded names, even Bitcoin rollover. The bulk of that selling, I think, was some liquidity concern, right? That the Fed had to do something, right? Again, whether they really had to do it or the market prices in that they have to do is irrelevant to me, right? Because if the price action's acting like that, you know what I mean? It's foolish to jump in the middle of it. Okay. So now fast forward to where we're at post Fed meeting and what Powell has done. He has fixed that liquidity issue. Okay. So that problem is solved. But at the same time, liquidity has topped out and it's not that bullish environment anymore, right? So again, it wouldn't be shocking to see some of the smaller speculative type names as a whole, right? There could be exceptions off news, like you're seeing space stocks off news run. Okay, as a whole, they probably trade range bound and consolidate. And you can make that argument for Bitcoin, right? Again, based off liquidity, Bitcoin, these lows should hold, right? Like the majority of the selling should be done based off liquidity, but the upside may be just as difficult, right? So maybe just a more range-bound, choppier environment where that both sides get shafted. Right? Longs and shorts. Okay. One thing too, Bitcoin, I think, is in that camp set up, right? Here's what I mean by that. Even if you're not a Bitcoin player like I am, okay, and you trade more of the proxy names and ETFs, we stroll into next year and Bitcoin is chopping around down here, right? And all you see on Twitter is that meme with the guy, stick figure guy with the stick hitting Bitcoin, do something, right? I mean, that's a signal in itself. And we see that, and then all of a sudden we come in on a Wednesday and they're sweeping up IBIT like we have seen them sweep it up in the past, IBIT, the ETF, or a BITX or a BITO. All right. At the least you got a decent trade set up there. Again, at least you have an edge there off the flow. Like for me right now, and that's where sweeper activity plays a huge part for me. Without that, I feel like I have zero edge. I'm out here with an opinion just like everybody else. And what makes me more right than you, or you more right than Joe, or Joe more right than Frankie Bag of Donuts? Right? We all have an opinion. We're all clueless. You know? But if this thing is chopping around here, and on one day out of nowhere, all of a sudden, you got sweepers coming in and firing missiles at this thing, okay? Now, if my probability of this thing going higher or lower was 50-50 prior to that sweeper activity, at the least, and some of us will make the argument probably even better odds, but at the least, it bumps your odds to 60-40 off notable sweeper activity, right? That's going to head in that particular direction. And that's your edge. That's simply your edge. It's not a crystal ball. You don't rub it. You don't rub sweepers and guarantee forecasts come out of it. At the right spots, it provides an edge. It tilts the odds in a certain direction. Right? And an edge, just like in gambling or in market terms or anything, over time, if you manage your bankroll properly, you're going to make money. That's simply what it is, right? So again, I think Bitcoin is set up like that too, right? Up here, no. As it's coming down and everyone's still trying to find the bottom and everybody's still, the flow's still the same shit, no. But now, if this thing lingers down here and quiets down and both sides are getting shafted and nobody wants anything to do with it, and then the smart money shows up, now you got something. All right? So that's the big change for me, guys, right? Coming into this webinar is that the stuff that I couldn't even offer an opinion besides roll, take profit, and just sit on your gun in a lot of these names. I think now they're alive again off aggressive buying. And I think that's a good thing. Now, again, whether they lag next year overall, I think is a very good chance, but that's okay because there's still going to be trades there at the right spots off low. You understand? So we just have to get to that point. And yeah, I don't know if we're there yet because we want the flow to quiet down in a lot of these names, but we're getting a lot closer here. We're getting a lot closer. CoreWeave 50 puts. I don't even remember seeing that, Dan. Is that this week? That's why I probably ignored it. Probably rolling out protection. Expiring December protection. But if it's this week, I really don't know. I haven't really paid it much. Again, not that I haven't paid attention. I've been paying attention, obviously, is what I do all day. I haven't put much weight into the flow. Here, let me give you an example. Okay. This is a name that's catching decent action again here. All right. I played it. But, the reason I played it is they did this November OPEX. They came at a better spot, but they're here. Okay. Active flow, part of it's rolling. Okay. But eventually it caught some momentum. Now, it could have been just the right time, the right spot, certainly possible. But here again, December OPEX, and there's an uptick in action. Okay. It's off a little bit of a pull. But again, there's rolling involved. So it's not the cleanest action. Right? This is the only thing I played. Or like I even acknowledged the flow in, you know? Everything else. Again, this week, when you get into these OPEX weeks, the only edge out of the flow is weekly activity. Right? So if they're coming in aggressively buying weeklies in Tesla, normally we're not putting too much weight into that because they're weeklies and you're just day trading it, right? You don't want to leg into a position of weeklies, but because of all the rolling activity this week, the weekly speculation is probably the best, the cleanest signal for short-term momentum. All right? So you kind of you try to get in the middle of it and take advantage of the momentum. But beyond that, it's a flat-out guessing game. Nobody has a clue. Any name you mention to me that's seeing size order flow, I will show you multiple December positions in open interest that expire this week. How do you know it's not replacing some of that at the least? Right? We went over this. Okay, puts or calls. CoreWeave, for example. Okay, if I'm long CoreWeave or I'm short CoreWeave, doesn't matter. Right? But I have December puts that are expiring this week. Okay, I want to keep protection in the name, or I want to keep downside exposure in the name. I got to replace those December puts, don't I? So I'll go out and buy January puts, March puts, whatever. Now, is that a new bear bet in the name? No, absolutely not. Right? It could be even profit taking in the name. Right? Maybe I'm putting less principal into those puts now and pocketing some money. So there's really no clean signal there. Complete guess. Now, a lot of times because of the market action, if the market is weak, like if we're in a bear market, people ignore it and they're going to chase any size puts because they force themselves into believing it's clean, right? Or we see it all the time in bull markets. All right. We just saw it recently with the rolling activity in all these names into the highs, every OPEX. They got away with it. They got away with it. They got away with it until they didn't. But the truth of the matter is, we don't know if it's rolling or not. So take the week off, come back Monday, and you're going to clean the picture. That would be my advice. What activity in 6 months out of the money debit call spreads tells you, if anything? EB, I don't understand what you're asking me there. What activity in 6 to 12 months out of the money debit call spreads tell you anything? So in other words, somebody opened up call spreads 6 months out, and you mean for debit they laid out money instead of taking in a credit? I'm not a big call spread guy as a signal. Sometimes if they're huge size-wise, will get my attention, or there's sweeper activity around the call spreads will get my attention. The reason being is this, okay? What I'm truly after on a day-to-day basis when I'm looking at the flow, sweeper activity, I want that degenerate conviction. You understand? I don't want size negotiated block orders. I don't want stock replacement. I don't want somebody who's remaining bullish but taking some money off the table. I want the order flow that screams to us, I need to get in, and I need to get in now. And I need to get my hands on as much as I can get on. You understand? That's the order type of order flow I'm looking for. Everything else to me is mashed potatoes. You know what I mean? There's a story behind it all. So, somebody can be bullish in XYZ and open up call spreads. Maybe he's bullish, right? Maybe he's wrong. We all could be wrong. The reason I like that aggressive conviction flow is because whether right or wrong, they're stressing that conviction. And usually when they're stressing that conviction, they're doing it for a reason. So my rebuttal to somebody who tells me, oh, did you see that call spread today? If he was that bullish, would he have spread off those calls? If you felt really good about TMC going higher, are you going to sell that second leg of call spreads to take down your cost? Or are you just going to buy the piss out of it until you run out of money? All right, let's be honest. So again, I'm talking about when we're reading the flow, what type of flow we're looking for. I'm not talking about for ourselves. Right? Like call spreads for ourselves, that makes total sense. I'm not saying not to play call spreads. All right? I'm talking about the type of flow we're looking for as a signal. Yeah, well, right now, this week is a big OPEX week. Huge OPEX week. So even call spreads, though, AB, anything right now, we have no way of knowing how clean it is. It's impossible. Again, unless you know the player personally or the fund personally. But as we get into next year, again, because at the end of the year may be quiet, depending on the price action, right? If we sell back off a little bit, right? I'm sure the call buying is not going to be anything aggressive or spectacular. It's the end of the year. But as we get into next year, and especially with some of the hot stuff that people wanted haven't corrected here, right? They've corrected. And the other parts of the market that weren't showing life coming to life, I got to believe we're going to see decent aggressive buying. I could be wrong, but there are opportunities out there. I think to me, and again, things change in this game. That's why it's so impossible to predict going further out. To me, the risk is if something in AI here unraveled on the credit side. All right? That's where I think you probably have a little more selling than you would like, but I still see money shifting over to the other parts of the market, right? Initially, they probably sell, especially having that they've rallied here over the last month. But, I give you the 2000 bubble as a perfect example. That was a huge bubble bursting. Initially, the whole market corrected, but after that initial correction, there were bull markets all over the place outside of tech, all over the place, and small caps being one of them. So, but I think that's the risk here, right? Something cracks in AI, and because of how crowded that trade has been, that's the problem when things get crowded. They can overshoot to the downside. Again, nobody sees that as a high probability risk here. That spooks me a little bit. But all kidding aside, nobody really sees that right now. Not even the credit markets are sniffing out anything like that right now. But I think that's the risk. That's the risk. So, that's why we want to be prudent. Even the stuff we like, we want to be prudent about buying. And even more importantly, the stuff that has corrected, we want to see good-looking buying show up. Otherwise, I'm not going to participate. You understand? Even being that they're down a decent amount, unless I see that sweeper activity show up, I don't think it's worth sticking your neck out because of how crowded these things have been. And you have risk there. just because nobody thinks a stock can go lower, there's always that risk. Thank you, Mr. Zach. Yeah, and it's interesting. The thing I find interesting, Sahil, about the AI trades, that even the good news, well, I guess Micron kind of broke that a little bit today. But even the good news, they've been selling into it, right? They've been selling into it. So that just tells you that it's still crowded. Even though they've come off, it's still crowded. It's still crowded. I think more time than anything else. Like, time wears people out. Time wears people out. Listen, the longer these things go without ripping the cover off the ball, people lose hope. They lose hope. And listen, things don't go straight up or straight down. We talked about this. Sahil, you remember we talked about it. Going into next year, you can get a huge rally over the course of 3 months in all this AI stuff, but it may not make a new high. And guess what? After that rally takes fold, right? It rolls over and sells off again. People are automatically, our brain goes to extremes. Right? It's either runaway bull market or crash. There's a lot of in between that. Right? So here, this is what I'm explaining to you. Right? Like, for example, here's Oracle. Okay? There's a lot of damage here. Right? Certainly can make the argument that a lot of the negative news has been priced in for now, at least, especially if these credit default swaps stop widening out. Okay? You can get a rally, Oracle. At some point next year, it takes it back to 280. And people will be jumped up thinking they'll be looking at this again, right? Very easily, that could be the high, and it sells off there. And all of a sudden, you look back, and Oracle has been in a range-bound consolidation off this correction for 6, 7, 8 months. All right? So this is what I'm getting at, though. This, I think, is the opportunity, in my opinion, for us. Okay? If this happens and then you bears want to make the argument on the short side, we'll cross that bridge when we come to it. It's never easy, right? But I think the opportunity for us going into next year is this. Now, again, I want to see them come after these whatever names it may be that they're planning on this happening, and I want to see them get swept up aggressively, right? Because then otherwise I'm not going to have that much conviction that it can do this, right? It may do this. So if the sweeper activity shows up, especially as these things die down, that's what I'm saying. Like, we want things to remain tame here. You don't want things to get, all right? So you get kind of choppiness, that's lows, bearish news still exists. The flow's dried up. You don't even see Oracle volume anymore. But then they show up over here. That's the edge. Right now you got an edge off sweeper activity again, where you haven't had an edge off sweeper activity at all. Right? Because even here, okay, this catches, and Oracle's not as active as some of the others, but you guys know how flow works, right? This goes like this, and there's sweeper activity all along the way, rolling, blah, blah, blah. Now it does this, okay? And there's still sweeper activity. But as this thing heads lower, now they're rolling down strikes for a higher delta. They don't want to stay that far out of the money, right? If somebody rolled at 320 into the 450s, and this thing is at 250 right now, they want to roll those down if they still want exposure. So the call activity you're seeing a lot of times is rolling down. They're rolling down strikes. All right. And then after that runs its course, that's when you see flow kind of dry up. And then whenever that buying shows up again, that's your signal. Make sense? You know? So again, for me, it's the flow because I'm no smarter than anybody else. I don't know. I don't know how this turns out. Who am I to tell you these credit default swaps aren't sniffing something out, a bigger problem out? I don't know. I have no idea. Let me tell you something. In 2008, as the bank swaps continued to widen out, you had every jabroni under the sun. Nah, it's an opportunity, blah, blah, blah. You had the bank CEOs coming on Bloomberg and CNBC every day. There's nothing wrong with our balance sheets, our credit, they're nuts. Blah, blah. You had guys, I'm not going to mention names, on CNBC guaranteeing firms wouldn't go under. And you know how that ended up. Right? Nobody knows. And you guys know who I'm talking about. With what was it, Lehman? It was Lehman, I think. Yeah, well, I think so. This TMC, they did the same thing in November. Remember the action in court recently? That was over here. That was November OPEX. Right? And this action looks very similar, December OPEX. So I think a big part of the flow we're seeing is replacement. But what got me a little interested that I played the equity anyway, because usually I'm not even acknowledging it, is you had some speculative appetite there. You know what I mean? You had a pop in IV. It looks to me like something like maybe an event or something is lurking. They have an interest in something. And I think, what are they, next week? So we're going to know rather soon. You understand? I think the line was 12.26, if I'm not mistaken. That was catching kind of that speculative appetite. So that's why I think it was worth a play. You know what? I'm not going to marry it. If it heads south, I'm wrong. I'm going to pull the plug and get the hell out. Yeah, exactly. For equity, I think it's worth it, right? For equity, it might be worth it. So we'll see what happens. Yeah, same thing. I got lucky with this guy. Yeah, same shit. But again, you see, I'm not holding these things here. Yeah, I'm not holding these things. You got a lot of decent names that have corrected if they see real flow. That's what we want to look at. We don't want to look at the crap. We don't want to look at the crap. Any other questions before I wrap it up? Did I miss anybody's questions? So yeah, listen. Mario has posted the link for the Steam Room. I don't usually plug. I'm not a big salesman. You guys know. I don't pump the sales aspect too much. It feels weird, even though I probably should. But I definitely would recommend, if you're interested in using the flow as a signal, especially as we get into the end of the year next year, right? Because we got a week left. I think we're set up, again, the perfect way to say is that we're set up for sweeper activity to provide a real edge in a lot of the names that we've been itching to find opportunity in. So if you want to kind of get a feel for how the flow may work and how it may provide a signal, we offer a trial. I think it's a week now. I'm not sure. But the link is in here. All right. It's a free trial. I think it's a free trial. I'm almost positive. Yeah, how much I know. But as we get into the new year, you may want to take a peek, right? Take a peek. And because I think we're set up well. I think we're set up well for opportunities. Now, yeah, I could be totally wrong where the flow never shows up, right? Or we go into a little bit of a pullback and flow doesn't show up initially, right? But again, I don't think that's a bad thing. I don't think that's a bad thing. No, I don't think that's a bad thing. I think even if we get some weakness, there's a lot of good things out there that money's going to find opportunity. I didn't even show this was the other thing. All right, so this is kind of what I do with it. Oh, okay. Look at financial conditions. It's really, really difficult without some credit calamity to get bearishness going here, as a whole. Like financial conditions are extremely loose here, extremely loose. That's why a lot of these economically sensitive names are coming to life. Like the backdrop is suited for them, right? And then you have Trump bringing in his guy, right? Which is probably going to be even that much more accommodative rate-wise. He's going to do everything in his power to get the housing market. There's a lot of things involved stimulus-wise for next year, for that cyclical camp especially. A lot of things. It's going to be really difficult for selling to not find buyers in these parts of the market without some, like I said, credit calamity. That's usually, what ends up showing. Like, example, COVID showed up, right? Like, you can't foresee that. You understand? COVID shows up, market's going to take it on the chin. Now, if V-shaped, like we've never seen a V-shape in our lives before, in one of the best bull markets, right? Most aggressive bull markets came out of that COVID correction. But if something shows up unforeseen, there's nothing you can do about it. But that's usually the only time you see a market unravel with credit with financial conditions this loose. That's usually only when it happens. Oh, Affirm. That's interesting. Affirm, because look at Visa. Visa looks good too, right? All these names, because this is like this would be a cyclical. Look at Visa. Let me take some of this off here. Just quickly, I'll rattle through a couple names. Some of them you may want to see pullbacks, a little digestion in because they've been hot. But some of them have run into Niners. We've talked about a few of them. Here's Visa. That looks pretty good. Mickey D's. Look at Mickey D's. That looks really good. Okay. AIG, I saw it today. Like this came a little too far, too quick, maybe a little digestion here. But these are all major breakouts here. The Steel Dynamics, I showed you guys off the flow a few weeks back. Steel Dynamics came out and lowered guidance. You realize that? They came out yesterday and lowered their guidance, and the stock traded lower pre-market and ripped. Okay? You know what that tells you? Nobody gives a shit about what's happening now. They're looking ahead. You understand? They know there's issues here. That's why a lot of these names couldn't really get out of their own way for so long. But now they're looking into 2026, right? And they're seeing a much more bullish backdrop. And that's why you're seeing this type of price. Look at this breakout. Okay? Again, these are the leaders, right? These are the larger names we all have heard of, we know about. As and if this continues, it spills over into other stuff, other names, right? Other large cap, mid cap names, and small caps, right? If the small caps are going to be in bull market mode, we're going to see smaller cap names get involved in a bigger way. Yeah, like these are those are the AI utilities, right? Like look at these things. Yeah, again, see, the only thing I would say is that they're up so much. That's the only thing I would say, that they're up so much. They've had their run, they've had their day, these things. But, dips may present opportunities, right? Because the fundamentals are there. Oh, yeah, just you have some digestion there, right? Some consolidation, whatever the hell you want to call it. I mean, these have been the best group on the street. How's this guy doing? PWR. Yeah, look, I mean, that thing just made a new high last month. Yeah, that's the only thing I would say about these things, is that they're up a lot, but the fundamentals are there, The fundamentals are there on all these things. These things have crazy fundamentals. Look at this. Jesus. Yeah, you see, it's funny to see here, right? We were talking about that. Amazon Tesla is part of that consumer discretionary camp. And I wonder if they participate. Well, already Tesla has. Amazon may too. Amazon may get involved too. Yeah, consumer discretionary. Right? Because again, if the consumer, you kind of stayed away from the consumer, right? The consumer hasn't been anything special. Again, if there's going to be lower rates, tax break, whatever, more economically sensitive stimulus focused, that should help the consumer spending, and that's why you're seeing like consumer discretionary showing some life. This is the most underexposed group on the street. Consumer discretionary, especially amongst like hedge funds. They wanted nothing to do with this group. Main Street, exactly. Main Street. So a lot of stuff going on. A lot of stuff going on into the new year. But like I said, the thing we got to remind ourselves is just, don't get too antsy, right? If things are running, don't chase overextended moves. We're not just looking for a quick trade out of these things. We're looking to milk a trend, possibly. And when you're looking to do that, you want to take advantage of pullbacks. Right? That's where you want to take advantage. Pullbacks and initial breakouts. You don't want to chase. All right, my friends. Enjoy your rest of the week. Enjoy your Friday. Christmas is next week, right? So I don't know if we're a Thursday webinar. I don't know when Christmas is. But if I don't see you guys again next week, have a happy holiday. Merry Christmas. Steam Room guys, obviously, I'll see you tomorrow and all of next week. All right. But happy holidays to everybody out there. Enjoy the rest of the week. Have a great weekend.